Welcome to Venture Podcast, presented by VNTR, the world's leading investors community, the place to learn from VCs and capital allocators.
Saudi Arabia seems to be a quite interesting market because hospitality or travel industry, as you mentioned, is one of the big things there. They are pushing so much money into this industry to become the not the next Dubai, the next
One of the top destinations.
yeah, exactly. Become one of the next top destinations. Investing a lot. If you look at the Vision 2030 of Saudi Arabia, it's a quite interesting market also to go to look for LPs. Looking into this topic, there will be supported applications with some machine learning or AI. And maybe also some AI supporting research in how to use food waste in a specific way. Most probably, I think there will be also some things going up.
Hey guys, welcome to VNTR podcast. We're hosting Benedikt today. Benedikt, welcome. Please introduce yourself.
Hi, thanks for having me. Yeah, sure. So I'm Benedikt Knobloch. I used to be an entrepreneur. Over the last 12 years, I've built two companies in the restaurant tech space, and now I changed to the other side, building my own venture capital firm with a befriended team, which is focusing on early stage investing into restaurant tech companies throughout Europe.
Great. Yeah. So, how is maybe we can start with your entrepreneurial journey. It's kind of what did you build? What sparked the interest to be an entrepreneur from the get-go?
So, good question. It was kind of accidentally. A friend of mine asked me back then during my diploma thesis if I know someone who could help him building some interesting stuff in the financial space. And as I needed some money back then, I thought, why not joining? And from there on, everything started. So it was very interesting to build own stuff, and we got along very good. We know each other since several years before, and then we decided to start our first company. So this was more or less an accident, but then we stick together.
So it wasn't your idea when you first started. You joined someone.
Exactly. I joined, but we elaborated the idea together at the beginning. So it was more or less a guided way to find a joint idea. Yes.
So you raised funding for that one, right? Eventually.
Yes. For the first company, we raised a little bit funding. It was around in total 80K only. We grew the team to 45, 50 people, doing some millions of revenue, but didn't need more funding actually. We were profitable, yeah, so just a little bit of funding. The second company we've built, there we raised a little bit more than 1 million euro.
Yeah. And what were the results of these journeys?
So a good question. So the first startup was, let's say, a lot of learning, how to build a startup, how to scale, and at the end, how not to make an exit, because it was a failed exit. I think it was partially on our side, but on the other side, due to a CEO change on one potential exit candidate, it failed, and on the other side, then COVID hit, which in the restaurant tech space was most probably not the best timing to sell a company, which kind of wiped out any other possibility to sell. And the other company, we are still in discussions how to exit.
And if I could just cut in there, I mean, speaking about entrepreneurship and sticking to what you know, what advice would you give entrepreneurs or prospective entrepreneurs who are thinking about doing their own thing? I mean, obviously, it's a case of trial and error, but and you learn as you go. But what's the one thing that you would say to people thinking about going onto this journey?
Um, Good question. So for us, or for me, it was always the most important thing was the team. I know you hear it everywhere. It's always about the team, but this was for me one of the uh, most trustable things throughout the journey. If you don't have a good, reliable team, it breaks up very quickly. And this is also what I saw when helping other startups to grow, or now currently when I put my head as a VC on when starting to talk to the people, you really see um, how much more valuable it is, or how stronger the connection between the teams is, and how they can bring the company forward. So it's I think it would be the team. Be sure that you kind of know the people and you get along very good with them.
And what is the second thing?
The second thing, I would say, don't be afraid of failing. I think with our first startup, it took us at least 2 to 3 years to find a really good go to market, or the product that would scale the company to those revenues. Also with the second company, it took some time to really understand where the problems in the market is, how the product needs to be, and then how to find a good product market fit, or the go-to-market solution. So it's don't be afraid of running in a direction and let's say running against the wall and standing up again, and don't like stick too much, especially in the beginning, to the ideas that you had. Maybe the market is demanding something else. So I think this is very
So
important.
pivoting and pivoting is important, but also being persistent, kind of keep moving is important. And you mentioned timing, right? It's kind of timing to exit or timing with go to market is very important. So can you tell a little bit about the timings, kind of why the timing was right for the products that you were building? How did you measure that?
Mhm. So I think especially for the second company, why the timing was right is that since COVID hit the restaurant tech industry so hard, the restaurant owners needed to innovate. So building a new product, which didn't even need to be like a completely new idea. It could be a software stack, a second generation of the software stack. The market was kind of ready, because the restaurant owners needed to innovate. The industry selling into restaurants needed a new handle to get into the market. So it's we thought it could be a good idea. That's also actually the starting point why I said I would be willing to build this fund. It's because, in my opinion, or in our opinion, the market is actually ready for innovating now, the restaurant industry, or restaurant tech industry. And this is why we decided to build that fund, and getting in early, very early, into new ideas in this market could be a perfect timing. We will see in the long run, but yeah, timing is very important. Um, and regarding exits, I think one of the biggest learnings that I had was not being experienced in this market, like not having done an exit before and being quite fresh to the startup scene, I would suggest to other founders or even to myself in later stages um, to work with people that are experienced in this market. And if it means that you need to work within a consultancy or an M&A boutique, do it because the value should be there. It's especially if you want to sell to a corporate, you need to have a handle on it. And I didn't. I definitely didn't have it on my first.
Yeah, I also experienced failed M&A in the past. Also, like in travel industry, we failed to sell our startup in the past. So I do agree with you that it's important to work with advisors, but with the right advisors. And sometimes you may choose the wrong ones, and it also may lead to a failed M&A. But again, first time entrepreneurs, they don't have the experience to how to exit, right? And this is something that experienced investors may bring to the companies as well. Cool. And so you chose to transition to be an investor. So what sparked that interest? Why not keep building? Because you gain so much experience in the industry, so the next one could be a huge success, right? So why give up?
So actually, let's wait what the second one is doing. Could also be quite good, but I think so. What I realized is that especially in this market, and this is coming back to the timing. Including with my team, we thought that actually it's the perfect timing to build this venture capital firm, because there is no one else in Europe really tackling restaurant tech in super early stages in Europe. There is no VC firm doing this. There are some that are a bit on the sidelines or investing a bit later. But what I realized when I was raising, especially for my second venture, was always this answer when I spoke to the more generalistic VCs. It was always amazing market, amazing traction, but please come back when you have more proof points, as we don't know this industry so much. And this was one of the striking points where I was intrigued by building this venture capital firm, because there are so many startups now getting into the market in the restaurant tech space, and especially in the sector of from farm to fork innovation in the supply chain, which is also for us restaurant tech. That we think it's the perfect timing. So it's much more going into this market because we saw a need of a VC, and obviously then a very good opportunity to build this.
So if I could just cut in there, I mean, you're a hyper-focused VC focusing on restaurants and hospitality tech. If I could ask a question that might sound a bit strange, you know, if you were to get into a time machine and go into the future 10 years, what do you think the biggest change in restaurants and hospitality would be that you'd notice at first?
Good question. So I think it will become a very much more personalized experience for the guests. You see already the first tendencies in this direction. Obviously, GDPR and Europe killed a lot of that, but you will find some ways around it. So between guest and restaurants, there will be much more individual experiences and more hybrid model. Not everyone will be going out. It will be most probably be more like symbiosis. I don't know if it's a really English word, between going out to eat and having a great place at home where you have nearly similar experiences. Regarding technology that is supporting the restaurant industry, I think there will be a lot more focus on sustainability, meaning in the supply chain, waste management, upcycling, because it's one of the biggest industries if you look at food waste. So I think there will be a lot changing in this direction, especially in the more emerging markets. I just came back from Saudi Arabia, where they are currently building the cities, the Dubai 2.0, or however you want to call it. And there you still have a very great impact with technology because they are just building it. I think in Europe, you come to more or less saturated markets. If you have a waste management solution there, can still be very big, but you're entering already a market which is already there. Instead of let's say the MENA region, and there are some regions where they are just building cities in the desert, so starting from zero.
Do you see that there is enough startups in the industry to specialize on just one vertical?
That's a good question that I sometimes hear from investors, so from LPs. So we are building. First of all, we are building a quite small fund, which is 20 million, and we will be investing a super early stage. So we like to be first money in or just after family and friends. I think the market is big enough, especially if you look into the innovation of the supply chain. So traceability, waste management, upcycling, apps between restaurants and suppliers, which we have already seen in the last couple of years popping up. And then on the other side, I'm pretty confident that the market now is ready for the next TripAdvisor, let's say, or the next applications to discover, to book, and to start a new experience between restaurants and guests. So I see a lot of things happening there. And on the other side, due to COVID and all the crisis afterwards, there have been massive changes in the hospitality industry, namely, for example, the staff shortage that you have in the hospitality industry. So all the companies that are now starting in this area, from normal software, maybe second generation of software around employees for shift planning, etc., to ease processes, digitize processes, so you need less staff, to onboarding, training, software gamification to train less qualified or not qualified people, maybe in kitchens or in the guest room, to robotics kitchens, which we see coming up a lot. So coming back to the time lapse, it could be that robotics kitchens also is coming up. For now, I would say it's a tough one because it's you have this huge maintenance risk, which is still more, let's say, expensive than to have the waiter or the chefs.
That's super interesting because I guess the elephant in the room in the entire world right now is AI, right, and automation. But a lot of these jobs that are so-called safe at the moment are those physical jobs, you know, the ones where you have to use your hands and do stuff. But do you think AI is, do you think it has much of a place in hospitality within the next kind of 5 to 10 years? Or do you think it is that kind of, you know, dysphoria, maybe that's the wrong word, but do you think it is that kind of it is that pervasive? Do you think we will see AI in the hospitality industry within the next kind of few years?
Definitely. I would not say that you will completely wipe out the experience with going to a restaurant and then still talking to people. I think this will still continue, especially on the more luxury, like more expensive segment. But definitely we will see in nearly every aspect underlying the some AI components. Meaning, if you want to book a table at a restaurant, like the whole conversation, it's already there. Like there are companies streamlining the whole process with machine learning applications or maybe even AI. We will see this, or for running a restaurant more efficiently, meaning when and which supplies should we order, looking at different aspects that like weather forecast or something like this. This was just a statistical, so you would only need some statistics for that. But looking into this topic, there will be supported applications with some machine learning or AI, and maybe also some AI supporting research in how to use food waste in a specific way. Most probably, I think there will be also some things going up.
Let's step back a little bit towards the fund, right? It's kind of, you mentioned that the team is the most important when you build a startup. What about the fund? It's kind of, how do you go about? It's kind of basically, you started from scratch to build a new fund. So what is the journey? How did you start building the team and further?
It was actually it was a really tough one, and happy to share some of my thoughts during the whole process. First of all, to find the matching GPs, so the founding partners, general partners, to build the fund. I built it with my brother Valentin and a long-time friend and former angel investor into my startups, Thomas Koch. And I really focused on having like having people in the team that can support in every angle. Because for me, building a fund the first time, I didn't know how a fund structure on a compliance or legal side looks like. So my brother as a lawyer and Thomas Koch as a lawyer since several years, having experience in building funds in Luxembourg, where our fund is already founded, helps tremendously, so that I can completely focus on the strategy of the fund, because I know the market, talking to potential investors and talking also to the ventures at the first place. And then on the other side, I was thinking, okay, as a VC firm, obviously, you will do some investments into startups, and I've only been on the other side of the table, so I know how to, let's say, build efficiently a business plan for a VC firm. So I would know how to read those documents, but I've never been experienced or very much experienced in the venture capital industry from the investor side. So would a new company be a good investment for a VC firm, for bringing maybe the returns and all these DPIs and MOIC and however you want to call them. So I thought the most important thing is to get additionally to the founding partners a very good investment team on board. So that was the challenge, because building such a small fund, 20 million, and normally you have a 2% management fee, which means during the investment period, if the fund is fully raised, you have 400k. How to pay a good investment team. So we came up with a new kind of new structure where we have venture partners joining our firm, venture partners that I know for a very long time, that are very experienced in the VC industry, working or used to work with tier one venture capital firms in Europe. And how we incentivize or how we managed to get them on board was that we share a bigger portion than usual of our carry. And this came up like this was the idea was that those investors joining our team would kind of leverage their angel investments with our fund. And this is actually how we built the team. It worked out quite well. And being in this industry since 12 years, as mentioned, we already worked with the bigger players, got around quite well in Europe. So we additionally have a quite good advisory team from the industry that is supporting us. So it was,
How big is the overall team?
so we have 3 GPs. We have, including me, we have 3 venture partners, which we'll be announcing soon who it is. And then we have quite big actually advisory team, which is around 10 people, from payments to restaurant chain owners or hotel chain owners to ex-head of M&A Delivery Hero, for example, these kind of people.
Okay, so company that joins you as an investor, what value you gonna bring them as a team?
Yeah. So I think what we try to build is a venture capital firm, how I would love to have a VC back then when I was raising. So as we have been operational in this market, we try to, if wanted from the startup, obviously we will not force them to take our advice, but we are eager to help in any case. Either our advisors or me or anyone from the team is happy to support the startup. We have a quite big network of potential customers of the software. So working together, this is some of or one idea of some of the advisors that we have on board. They would like to see new technology and test them out in their, for example, restaurant chains or in their hospitality outlets. And so we can really support the startups after investing in scaling, building up a sales team, or even getting new customers.
Perfect. Yeah, that's great. And how do you go about the co-investors, right? It's kind of you're one of the first investors. You mentioned that it's quite hard to get specialized investors that will co-invest or invest further. So what do you do in order to build your network?
So we are quite well connected with the VCs in this industry that invest at a later stage. So kind of we are investing in their future deal flow on one side, and on the other side, the industry partners may be food and beverage corporates or supply chain corporates, and their family offices behind. They are very much eager also to invest into this industry, which could be sometimes the problem. For example, if you imagine random names, if you imagine Coca-Cola investing pre-seed into a startup, it's kind of dead on day 2 because Pepsi and all other bigger beverage brands would not work with them. We actually had a similar case with my former startup where beverage companies wanted to invest, and we couldn't take them on board because it was too early in the stage. And what we have built up is for this purpose. There is an option to do co-investments with our fund, where we hold the shares in trust and pool them behind the fund, meaning they do not appear on the cap table, and they cannot mess around. But still can participate at early stages.
So it's almost joining you as an LP, and you represent them early on, and then they can follow on later stage.
Exactly. It's no solicitation here, but yes, exactly. So this could be an idea to join. We see ourselves a bit more like a network than a VC, maybe. So joining to have like a clear view on the deal flow. We have scouts in nearly every country in Europe sending us now nearly daily updates. We have a quite good look on this industry, and then being able to do co-investments is definitely an option.
And can you tell us a little bit about your kind of fundraising strategy, and also kind of what advice you might give to other funds looking for capital for their VCs or any sort of other fund?
Mm-hmm. So last year was not the best year to raise funds. That's not an advice, but I think everyone felt it. One thing that I see now in the market, which is popping up quite strongly, is the operational led, or people that used to be founders that are now building their micro funds in a specific vertical. Friend of mine, actually, who is also an LP, he told me that quite interesting analogy that VCs are kind of it's a network game. It's always you get your deals through your network, so it's on one side it's hard to it's very, very hard scalable business. But on the other side, it's why these micro VCs that are very focused on either an industry or a geography could be very successful. And apparently there are some studies out which underline that. Obviously, I'm using this also when talking to potential investors. Which makes sense if it's a network business. You as a VC are only as good as the network where you deal the next opportunities from, and this makes sense if you're in an industry since some time. Then you will. If you're successful in an industry since some time, you will source, most probably you have a good network and source good deals. And this doesn't mean only, as I mentioned, in the industry vertical, but maybe also in a geography. For example, just came back from Tallinn, Estonia, and seeing a lot of neo VCs popping up in the Baltics that are focused on the region and are very well connected there. Makes totally sense in my opinion.
What is your regional focus?
So regional focus for us is Europe, Europe, but very vertical on restaurant tech. So other than, for example, the Baltics funds or Nordics Plus that are then in the Nordics, but then generalist to be a bit broader.
So if you're focused on Europe, there are European funds of funds, and European Union kind of deploys capital into funds. Did you explore this route as well, or you prefer private capital?
Let's say the institutional investors, namely EIF, or there are some also in Germany. It's a tough one for first-time funds. They are just, I had the feeling they are just opening up. So obviously we speak to them. And on the other side, it's it's for such a small fund, it's a tough one with EAF or the likes, because the minimum ticket size would would be more or less 10 million, I think. So it's tough to get them on board. On talking to the fund of funds from Isomer to Multiple Capital, or Molten, who is also doing some emerging fund managers, and there are some others, RSJ. Obviously, talking to everyone in the market makes totally sense. But I also see in this market that the focus goes more and more on those first time or at least emerging fund managers that are raising a very much focused fund, either regional or industry vertical, and a small fund. So I've seen a lot of appetite there. And yeah, as you mentioned, obviously for such a industry specific fund, it's very interesting for the industry itself or the family offices in this industry, because they want to have the access to those opportunities.
And what are your thoughts for the next fund? Right, it's kind of when you are in VC, your journey should be planned for 20 years ahead, right? It's kind of right now you're in the like first block in your journey, but what are your thoughts for the next funds? Because it's not like in startups, you just started another startup, it might be completely different industry, etc. With VC, you need to kind of have a plan. So what is your plan?
Tough one. But yeah, I hear this. It was maybe one of the first things I've heard. So you're raising fund one to raise fund two. um, it's a good question. Most probably, I think it would not make sense to build a second fund in the restaurant tech space, which would be normally you say the second fund is the double size. So I think this, from a timing perspective or from the market perspective, I think this would not be the best choice. What I think could be interesting is looking a bit into other industries and maybe even looking into other funds to diversify a bit, meaning a fund-of-fund approach could be something interesting. Especially now that I'm traveling around a lot and talking to all these VC firms to get a better feeling about what to look at when building a fund, but on the other side also to learn from other GPs how to raise, how to build funds. You get to know all other amazing people, and you think like it could be also a strategy to support them with also capital. But I think for now I very much focus on Souschef Ventures, so my fund, and I will go into this topic later next year maybe.
Yeah. You do need to think about your next funds as well, because it's like 2-3 years you already need to be working on the next one, and the strategy may affect your current fund if you don't. Yeah.
So I've got a question actually. You talk about micro VCs and kind of hyper focused. Do you think what sort of advantages do micro VCs have over the more kind of broad generalized VCs? Would it be that kind of that industry focus? Would it be a better network? Would it be a better strategy, better data? So what are the main kind of advantages?
Personally, and I'm not biased at all, as I'm very vertically fund here. I'm pretty sure. So network would be one of the most important things, as mentioned before, because you have better access to the industry. If you, yeah, if you come from an operational side, or if you're focusing very much super vertically, a super vertical industry or geography. On the other side, I think it's why I think that they are probably could be more successful is that also coming back to the network effects is the more focused you are in your network, the better you know the industry most probably, and the people in the industry. So you reach them better. If you're a generalist, it's as mentioned. I think it's quite hard to scale. It's not like a super scalable business, the VC industry. So the broader you go, the harder it gets, and obviously the later stage you go in. So you then rely on your network of investors that are doing the deals in an earlier stage. So I think the earlier you invest, so the pre-seed and seed, it's much more the vertically focused funds that will be successful due to better network, better industry knowledge, maybe even if they have operational expertise. And the later you go, the more generalistic, most probably you can go. Would be an assumption, but I'm quite new to the industry, and this is at least what I saw or what I learned over the last couple of weeks, months.
You also mentioned the struggle of entrepreneurs in the industry. In your vertical, is that there are not that many investors. So if you speak with many other investors and build relationships, and you are known as the go-to fund in the industry, you'll get all the referrals to you, right? As the first expert investor that will join, and then they will join you later on, and you can educate them about the trends and the industry.
100%, and this is already happening. Actually, we are already screening, obviously, the market. We have analyzed more than 300 startups over the last couple of weeks, months, and I got approached from a lot of different VCs to support on specific deals that are in the restaurant market. And what I've seen is quite interesting that on one side they rely on what I say, which is a good feeling, but on the other side that then more generalistic VCs even invest earlier stage into those companies because they then receive a better confidence about market or metrics. And but I receive currently a lot of decks from different VCs to write investment thesis on this, or investment memos, or look at their investment memos if I agree. So it's very interesting to be so focused. And if you go if you approach VCs in Europe, or let's say in the Nordics, because I've been traveling a lot in the Nordics and Baltics recently, then if you have a restaurant tech startup, I think you will have heard of Souschef Ventures, and everything will come to our table. If it's only for giving our expertise on this, or even for co-investment later.
Yeah, so we are building world largest investors community, and we have a lot of angel investors, funds, family offices. It would be great to collaborate with you on this specific vertical and potentially do co-investments and run syndicates. Yeah, I've been in the industry as well I built startups in the travel industry and luxury industry. So I do have some network in that space as well and interest. And of course, all of us are customers of these technologies, right? It's kind of we want to have better experience, better quality of food, and I think that ventures that you invest in will improve the quality of life for all of us. So we are here to support you in this journey. Yeah. And in terms of kind of you mentioned you travel a lot, and kind of which markets do you see good place to meet potential LPs for emerging fund managers?
So especially for my vertical, um, I saw it very interesting to see how let's say biased, not biased, how focused the family offices are. So either they love the industry or they hate it. So you don't have this maybe, um, especially in Europe. So Europe is quite a good place to go. And if you look at the restaurant tech space, the more you go north, the more digitized it is. The more you go south, let's say Spain, Italy, Portugal, um, the less tech-driven it still is in the market. And same for the LPs or potential LPs in this market. It's they The more you go north, the more you go to the tech-driven family offices or successful founders that have been doing great exits. And the more you go south, the more the traditional corporates you're talking to, most probably. On the other side, what I realized, because I actually went to one of your site events in Riyadh in Saudi Arabia, for us specifically for Souschef Ventures, Saudi Arabia seems to be a quite interesting market. Because hospitality or travel industry, as you mentioned, is one of the big things there. They are pushing so much money into this industry to become the not the next Dubai, the next
One of the top destinations.
yeah, exactly. Become one of the next top destinations. Investing a lot. If you look at the Vision 2030 of Saudi Arabia, it's a quite interesting market also to go to look for LPs. I think it's a bit overrun currently. Like a lot of people go there because they think, oh, the Saudis, they have money. Let's
You
go
you
there.
you have to be there. It's kind of you have to
Yeah,
have an
you have
office there. You have to
exactly.
spend time there. It's like just visiting. It's not gonna work. Yeah.
Exactly. This is the same, and you need a really good ambassador. This is what I realized. So they will ask for references, and obviously in Europe it's the same, but you need to have a local person that is trusted and supports you. Then you need to be there 100%. I agree with you. And also you need to care about the market. Sounds very strange, but it's not like a European VC or a US VC comes to Saudi, gets the money, and then invests only into their local, like only investing into Europe. It needs to be something interesting also for Saudi there. So you
No,
need
you
to
have to be
look at
committed to the market. You have
exactly.
to develop the market. Yeah. It's
Yeah.
yeah. That's what we hear as well from other VCs experience and also from the locals, that they
Yeah.
prefer, they want to develop their own ecosystem, their
Mm.
own home ground startups. So if you don't have that mindset or plans, it's probably a waste of time to go there.
This is 100% what I realized during the last times I was there. It's it's a super interesting market for us because hospitality tech or restaurant tech is hyper growth case there because they are building everything from scratch currently, or not everything, but a lot is built from scratch, especially in the innovation in the supply chain, waste management. The one of the biggest problems there, food supply chain is is a tough one. So there needs to be some solutions out there, and if it's solutions coming out from Europe to be built in or scaled throughout Saudi, could be an option, or directly investing into companies that are building technology there. So yeah, looking also into this, but for us, I would say Europe and maybe Saudi Arabia or GCC region could be also a good spot to look for LPs.
And Benedikt, just talking more broadly, you've made a few angel investments, right, in your career. What would you say would be the most common mistake that people make in that angel kind of investment realm? Because it's usually the first sort of investment that investors make, right? So obviously those are the most prone to, inexperience or mistakes. What would you say is the most common thing that people do wrong?
It's a good question. So I think maybe I was a bit lucky with the investments I made. I didn't analyze too much what they were doing. It was much more on a personal basis. Do I think that the people that are building the companies are like will build the next crazy thing? And I knew the people then. Well, actually, not for a long time every time, but I didn't focus too much on what they are building because I knew it's super early stage. There will be a lot of pivots, but do I trust that they will keep on going and not like with the first obstacle say, okay, done, next thing, and this is nothing for me. So are they really those hungry founders that really want to build something amazing? I've seen also some angel investors that are investing only in the vertical that they know. I would say for myself, this could be a bit problematic, but obviously I'm not a super professional angel investor, so I was maybe just lucky with my investments. But I have the feeling, and this is also one thing about our venture capital firm, why I really wanted to have an amazing venture team. So being operator in this industry, like you, I quite fast fell into the idea to help the startups to build something that I wanted to have in the market or that I have built before and I saw it was successful. This can help on one side, but on the other side, it can also be very disturbing. So I'm not sure if, so as an angel, not sure if I would invest into the same industry that I'm in. As a VC firm, I'm happy to guide or happy to support at any time, but still the final decision would be on the investment manager because they come like a little bit from the outside. And I think this could be a mistake for angel investors that I saw. But not sure. Have you seen this a little bit? Have you seen this in the market or?
Some angels invest in different industries to learn, right? But some of them want to be hands-on. It's kind of there those that want to be super hands-on. So those that they probably want to be in their own industry, but some want to learn other industries, and it's a good way to learn by investing small checks into different startups and be kind of quite close to the founders and learn about these industries. We need to wrap up, and the last questions that we ask is about your work-life balance. What do you do? You travel a lot, quite stressful time as well right now because you want to achieve your goals. So what do you do to maintain the work-life balance these days?
So I every time when I travel, for example, I try to have at least some period of time where I'm not working, like to explore the cities where I am, to like not doing vacation because it's too short for
Workation.
vacation, but
Workation.
we're a kind of workation and enjoy a little bit the local city and maybe also the food, as I'm in the restaurant tech space. I like to do this, and for me, I really try to calm down on the weekends, like meeting friends and enjoying life over the weekend.
Any sports?
Trying. I will get back to that soon. I think for now it's a lot of work. I used to do a lot of sports back then. Currently, like in the last month since I've built the fund, it's came a little bit short, but I will get back on very soon.
Cool.
Yeah.
Great. I think we are we are done for today's podcast. Thank you so much for joining us.